Hello and welcome to today's video. Today I will cover the latest results and highlights from the Lululemon's third quarter earnings. So without further ado, let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Ahead of latest earnings, analysts expected EPS in the range of $2.22 to $2.23, which would mark a 22 to 23% decline year over year. Revenue is projected to come in around $2.48 to $2.5 billion. It was projected, reflecting low single-digit growth. The main concerns from the previous quarter were continued margin pressures, elevated inventory levels, and a sense that the company is not innovating quickly enough to keep pace with market expectations. Despite that, the stock has rallied from the low 160s up to around 180s heading into the report. Now on to the results. So the first piece of news released after hours was that Calvin McDonald planned to step down as a chief executive officer and as a member of the company's board of directors, effective January 31st, 2026. He will remain with the company as a senior advisor throughout March 31st on 2026. Net revenue increased 7% year over year to $2.6 billion. Revenue in the Americas declined 2%, while international net revenue grew 33%. Comparable sales increased in total 1%, so in the Americas it declined 5%, while international comparable sales increased 18%. Gross profit rose 2% to $1.4 billion, while gross margin declined by 290 basis points to 55.6%. Income from operations decreased 11% to $435.9 million, and operating margin declined by 350 basis points to 17%. Diluted earnings per share were $2.59, compared with $2.87 in the same period last year. During the third quarter of 2025, the company repurchased 1 million shares at a cost of $189 million. The board of directors approved a $1 billion increase to the company's share repurchase program. The company ended the quarter with $1 billion in cash and cash equivalents and available capacity under its committed revolving credit facility of $593 million. Inventories at the end of the third quarter increased 11%. On a unit basis, inventories increased 4%. Now on to guidance. So fourth quarter revenue is expected to be in the range of $3.5 to $3.58 billion. Diluted earnings per share are expected to be between $4.66 to $4.76. For 2025, the company expects net revenue to be in the range of $10.96 to $11.047 billion. Diluted earnings per share for the full year are now expected to be between $12.92 and $30.02, and this guidance excluded any potential future share repurchases. Now on to their earnings call. So first on the strength and positives. So based on 2025 guidance, the company expects to achieve an EPS compound annual growth rate of approximately 20% from 2018 to 2025. The balance sheet remains strong with $1 billion in cash and no debt, supporting flexibility and long-term investments. Performance over the Thanksgiving weekend was encouraging. China mainland revenue increased 46% year over year or 47% on a constant currency basis, with comparable sales up 25%. Revenue growth in China mainland is now expected to be at or above the high end of the 20% to 25% full year guidance range, excluding the 53rd week. Square footage increased 12% year over year, driven by 47 net new store openings since Q3 of 2024. Gross margin outperformed guidance, with the upside driven by stronger than expected top-line performance, lower net tariff impact, and disciplined fixed cost management. Inventory growth remained controlled, with total inventory up 11% and unit inventory up approximately 4%, below initial expectations. Now on to operational progress. The company is executing against a three-pillar action plan focused on product creation, activation, and enterprise efficiency. Product creation initiatives include increasing the frequency and breadth of new styles, with new style penetration targeted to reach 35% by next spring. Efforts are underway to reduce product development timelines from 18 to 24 months down to 12 to 14 months. Product activation initiatives focus on improving store-level assortment, curation by local market. Enterprise efficiency initiatives include pricing actions, supply chain optimization, vendor negotiations, distribution center network efficiency, and company-wide cost savings programs. Holiday traffic allowed the company to clear seasonal and end-of-life inventory, improving inventory positioning as it exits Q4 and enters spring. Now on to challenges. So higher tariffs and the removal of de minimis provision continue to pressure the cost structure. Some expenses that were reduced in 2025, including incentive compensation, will need to be layered back in. The broader apparel market remains under pressure with evidence of consumer trade down behavior. While the company held share in premium athletic apparel, it lost some share in performance apparel. Inventory levels, while better than expected on a unit basis, remain elevated at 2 billion. Lastly, on their outlook, so China mainland Q3 performance exceeded expectations, but 2 calendar shifts will negatively impact Q4, so the early timing of 11/11 events benefited Q3, while a later Chinese New Year compared to last year will pressure Q4 results. As a result, China mainland revenue growth in Q4 is expected to be below the Q3 trend. Looking into 2026, the management expects negative factors to outweigh positives, particularly for operating margin, and operating margin improvement is expected to be a multi-year effort driven by ongoing efficiency initiatives, and the company plans to provide an update on efficiency progress in March of the next year. And lastly, price action. So after the earnings, from a technical perspective, the stock price appears poised for an eventual rally up to the upper resistance line, which lies somewhere around the low 300s. Depending on the time horizon. However, as highlighted during the earnings call, margin pressure remains a multi-year challenge, and any meaningful rebound will ultimately depend on a recovery in the Americas segment, alongside the continued strength of international growth. This is it for today's video. If you want the full written dive in this topic, check my Substack. Also, for more daily insights and market updates, check my X account, and for more educational content, check my website. Like, subscribe as a sign of support, and see you in the next video. Bye.